All right. It looks like we are live for yet another episode of the Mortgage Podcast. What I love about this podcast, Bob, is, when you called me several months ago around having a podcast really run by CMBs for CMBs and really shedding light on various authorities in mortgage and housing and real estate, which clearly CMBs is one clear designation of that. It seemed like that there was a missing avenue, right? A missing voice box of how professionals can comment on what's happening, within the MBA, what's happening in policy, what's happening in the industry, with a degree of credibility. So I love the fact, Bob, that you inspired this podcast, and then we can have great leaders like Dana that we can have on the show and to talk about all things mortgage.
Yeah, thank you, Rick. And Dana, certainly welcome to you. Appreciate, one of the people, you're one of my top 3 people that I want to get on. And I say that and tie the two things together. One, for Dana being here, as well as some of the awareness that I want to bring to some of the CMB society, is that those that are on their path don't really get the vision inside the CMB society till you earn your PIN. And it's that challenge. So Dana, was the chair of the year I earned my PIN, so long ago, and she was coming in, at that time. So, it's just interesting because she was 2015 chair and I was 2025 chair. So anyway, just good to have you here. And Dana, welcome. Dana Abernathy, Cornerstone Servicing. So why don't you just tell us real quick who you are and what you do?
Sure.
So the world knows.
Yeah. So I live in Nashville, Tennessee. I have been with Cornerstone Servicing now for 2 years. Prior to that, I was with ComputerShare, who was a company that was purchased by another company, and spent a lot of my years in mortgage insurance. And but earning my CMB really opened up like a whole world of possibility. And so I'm really, really grateful to have learned other parts of the business. And, and who knew that you could get so passionate and excited about servicing?
Yeah, right.
So, I mean, most people are thinking, oh my gosh, but there's just such a huge part of our business. And it also is so tightly knit with capital markets that I think a lot of people don't understand that as well. So it's been fun kind of sharing the servicing story. And the CMB Society, I mean, I really would not have had the conversations I've been able to have without getting my CMB.
And what year did you get it again, your CMB?
I got my CMB in 2004. And
oh, wow.
I was
okay.
one of the very last to be able to get their master designation. So a master CMB has both commercial and residential.
Got it.
So
she's got the little diamond in her CMB.
Yes, I've got the diamond in my little CMB pin. If you see it or not, but I love that thing.
Well, it's a true distinction because it doesn't exist anymore. I love it. What motivated, what year did you get into the business and like how did you even come about the CMB? I mean, I've been in the business 25 years and I really knew nothing about the CMB, and not by anyone's fault. It was just more in my ecosystem. It just never came up in conversation. I just wasn't really that privy to what was going on within the CMB until Meg Bennett, had said that she got her CMB. And I just said, well, what is that? That was a couple of years ago. And so it was through, and then all of a sudden, once I found a CMB and I met one, then they were popping up all over the place. All of a sudden the designation meant something because I understood what it kind of meant, sort of. And then I began to realize just how serious the thought leaders were who had the CMB and how engaged they were in the industry, which kind of called me to kind of ask myself the same question. Like, if I'm going to be serious about this or taken seriously, then maybe the CMB is one channel of doing that, So what was your journey in that, and how long did it take you to get that on your radar?
Yeah, well, so I got in the business in 92 as an originator.
Yeah.
And had an opportunity to work for CTX, which was great learning ground. If you remember CTX?
Oh, of course. Were you in Dallas?
Yeah.
Were you in Dallas?
No. I was actually in Virginia Beach. I worked in a branch out of Virginia Beach. 2 great mentors that I learned so much from. And, then I went to PMI and I spent 18 years there. And during my time at PMI, I was able to meet some other CMBs, and one in particular, a woman named Lisa Fagan. I remember being in her office, and she was telling me that she was studying really hard. And she told me about it, and I thought, oh my gosh, I could never do that. But I really thought that was cool. So fast forward, when I moved to Nashville, there were a number of CMBs, and what I saw in them is that people took them more seriously. Their conversations were deeper than what my skill set or knowledge was at the time. So I decided that, I could do it. And actually, David Fraze was instrumental in talking me into it. We were in School of Mortgage Banking 2, which is where you see a lot of hedging and servicing and capital markets. And he was the one that really encouraged me to do it. And but what was so curious is, in Tennessee, there was only one woman CMB. So I talked to her, and she was very encouraging. She became my sponsor, and I studied like I've never studied in my entire life because I was so, I didn't have the perspective that a lot of people had. So I really had to buckle down and study, and it was not easy, but oh my gosh. Yeah, and I always said, it really is the journey to your CMB that was so rich, because you don't know what you don't know, and you don't know the conversations that you're not a part of when you're not a CMB.
100%.
And so that was, and honestly, for me, and I hope, Rick, for you, and I know for Bob, it was life-changing. And I don't want to be dramatic about that, but it truly changed my line of questioning with my customers. When I was still at PMI, I was able to get promoted into national accounts. I got to meet and engage with people that I would never have access to before I got my CMB. So, and I was the second woman to get their CMB. And now it's great to see so many other women from Tennessee, specifically, because that's where I live and I'm most active. But it is great to see how many women have gone on to get their CMBs. I think the majority of our CMBs are now women.
Do you know of when you got your CMB in 2004, how many women prior to you had received their CMB? Do you know?
Gosh, you know what? I don't know.
What year was the first woman CMB?
Bob, do you know that?
I don't. That'd be a good question for the historian, the new project Deb's got running.
Yeah. That is a very good question. I do not know that, but I would suspect, well, I can tell you who the first CMB chairman was. It was Lori Pinto, the first woman. It was Lori Pinto. I think I was second after her. So, that was, and she was CMB chair in maybe 2011, 2012. I'm not sure, Bob, but when Lori was, she came a few years before I was able to get on the ladder. But it was a very small percentage for sure.
No, it's just fascinating. How quickly, even in the time that I've been in the business, really since right around 2000 is when I started getting my feet wet in the business. And it's like I knew so very little about it that it's hard to even include myself in it. But I've seen, even in my experience, a lot more women, more on the origination side. So obviously I'm on the retail origination side. So, seeing, women in positions of leadership and women in branch managers are obviously women, loan officers. The prevalence of that it's growing at such a high rate. It's hard. You can't deny it, and it's really, it's changed sort of the makeup and the fabric of companies. And I think without a doubt it changed, the industry for the better. And just in conversation, it's made it far more rich. It's fascinating that you say that the number of CMBs of every year now, there are more women than men that are getting involved. Why do you think that is?
Well, I can only speak for Tennessee, but I think because because we see other women that have achieved it,
Yeah.
and I think that we and hopefully all of us who are CMBs want to learn more about our business, because to your point, our business is very siloed, right? I mean, we know what we know in our lane, but do we really understand how capital markets and servicing and post closing all affect that front end, or how the front end affects all of those? And so, one of the things that I'm noticing is that when you give people just a little bit of information and knowledge, 8 out of 10 times they're going to want more. And I feel like, with our Future Leaders programs that we launched in Tennessee, and now some other states are doing the same, I am seeing that as a great training ground, and people are like, wow, I didn't know this. I want to learn more. So I think it's just evolution, and there's more women in our industry now. There's more women as leaders in our industry. And so I feel like, that thirst for knowledge, and to your point, this is our career, right? So why shouldn't we know as much as we can? So I just think that's it.
And I have 3 follow-ups to what you just said. All great stuff, by the way, Dana. One, I would say, not only do we know what we know people who know what we know. So seeing more women in the front encourages more women to say, hey. And yes, Lori was the first in 12. You were the second in 16. Madeline Johnson was 19. Sushila Dillon was 21. And Val Baresh was 2024. And of course, Deb Jones is now, and we will have at least 2 more women chairs afterwards, because it's the first time we have an all women-led leadership team. So I did find that. And you mentioned about, future leaders in Tennessee. Tell Rick what you were just in Virginia helping occur this week.
Yeah, so I've been working with the Virginia Mortgage Bankers Leadership to launch a Future Leaders program, similar but different to what we've done in Tennessee. And last week, talk about powerhouses, Deb Jones and Amy Creason, who's also a CMB, spoke and talked about the capital W, and also they taught the secondary class. And what was so cool is most of that class is originators, but even people who have been in the business for 20, 30 years are in this class. So it's not necessarily future leaders, but they are people who want to learn more about our business. And, many of the comments I got about Deb and Amy were, gosh, I could listen to them for hours. I mean, I had no idea that all of that went into pricing, how you price a loan, and what's involved. So it was really, really cool. And those future leader programs have been a great training ground for not only our local leadership, but people have gone on to state leadership, national MBA leadership positions, committees, and a lot of them are getting their CMB. So I think just in Tennessee in the last few years, we've probably had 6 or 7 CMBs come out of our Future Leaders program. So it's been cool.
I was sitting by Dana once at a different event. We were sitting there, we're looking at CMBs, and she's like, there's a Tennessee Future Leader. There's a Tennessee Future. She was just pointing out people that earned it. So a great where people are giving back, helping the industry and helping other professionals. One of the things I try to say is I help people become realize the people they are and grow into what they've already grown and become of themselves. Sometimes it is just the confidence in ourselves, because not being part of those conversations, you don't know. Melanie mentioned this last week the leadership was on a podcast with Rob Chrisman. And Melanie said, sometimes the door is open to me now, or did I realize the door is always open and I just didn't feel confidence, to try the knob and walk in and see how I would do. And I know I would resemble that remark a lot before, just trying to be confident to get in the room. And then once you're first to CMB, intimidated by everybody as hell when you're in the room, until you start meeting more and more folks and you get introduced by the people who do know you, and you start make those relationships and you get active within the society. And that's been the best reward to me. And I know, Dana, one of the things I wanted to ask you, since your time when you got your CMB, you know, it's over 20 years ago, right?
Yeah, 22 years.
Now, I mean, just, I asked this of Bob Brokesmith last year when we were doing a one-on-one at a CMB breakfast at MBA of the Carolinas. I said, talk to the group. How has the CMB society changed since, you earned yours to today?
Yeah. Well, I think what I see is there's definitely more interest in the CMB designation. I feel like people want to learn. I think there's more CMBs because when I got my CMB, I think there were less than 700, maybe around 600 and something, or just over 600. So there weren't that many CMBs. I think now that we have LinkedIn, platforms such as this, with people talking about the designation and the impact it's had on their life, I think I've just seen the growth. And I also see more originators. Regional managers. I've got a gentleman right now that I'm sponsoring, and he actually spent 12 years as a regional for a large IMB, and he's just opened up his own shop. And so he's an originator, but he's now running a business, and his incentive was he just needs to learn more about the industry and the impact and risk and compliance and things like that. So, I think just seeing the expansiveness and the different levels of people coming into the society, more originators, correspondent account executives. I mean, when I was coming through, it was mostly, SVPs and presidents and, people with big titles. And I've seen that evolve. And that's great because that's good for our industry, right? That everyone has an interest in learning more about how what they do affects the entire business.
Your career is fascinating to me because it's been so diverse.
Yeah.
And it's not, look, I think, I kind of joke because when you're in this business a long time, you become kind of art of the pivot because you end up pivoting through different market cycles, different opportunities that come your way, different roles that you might take on to kind of challenge you, but you've gone from, MI servicing, sub-servicing, capital markets, enterprise sales, lender strategy. Obviously, we just talked about your sort of trade association kind of leadership. You've been so involved in all facets of it. How does that enrich like your experience especially in servicing? I mean, all of a sudden servicing it used to be servicing was not really much because how many services are there in the country? 200 or 300? I mean,
there's a lot. If you count the QSOs, I mean, I couldn't even imagine. I mean, there's probably.
What about IMBs? How many IMBs are servicers?
Are service in-house or use sub-servicing?
Or who have their Fannie, Freddie, Ginnie approval? And that actually service.
Yeah, that actually
could be sub-servicing or servicing in-house.
I would say probably 100 to 150. I'm kind of guessing there, and I'll tell you why.
So it's a small cohort.
Because the industry evolves, right? I mean, it's a volatile industry. And so you have some people in it for a while, they get out, they have their tickets, they don't service. There's, it runs the gambit, right? But I mean, the big ones we know about, obviously the big box ones, are, the PennyMacs and now, Freedom and Mr. Cooper. I mean, they're all huge, but, servicing, where I think you were alluding to is, it's a conversation now that seems to be in vogue and people are talking about it again, right? I mean, we're realizing now that it's an asset to help you grow your business, right? Or to, especially if you're an IMB. And it also can help you with cash flow. We've seen a number of companies sell their servicing. Now we're seeing them want to retain again. So I think people are realizing also from the originator level too, is that it's a way to keep their borrower and be sticky, right? because when you sell off your loans, then you're kind of losing control of that borrower unless you have a very robust CRM. So the conversation's evolving. I mean, we've been busy this year. We've been, very grateful that people are, now knowing who we are and calling us. But I'm seeing more and more interest just from our industry as a whole. The conversation with servicing is more engaging and more strategic than I think it's ever been. Because you didn't used to read about servicing that much, but now you're reading about it a lot, not only within the news, but all of the things that people are starting to realize about servicing.
Go ahead, Bob. Sorry.
I was just going to say, I did Google while you were answering how many Fannie, Freddie seller servicers. They don't break it up because they don't publish lists, but they will have in one of their numbers. Fannie has about 1,200 approved seller servicers, and Freddie has about 1,100, but that's both bank and non-bank entities. Yeah. So it might just be entities that are approved that could retain servicing, and maybe they do it for some part of their book and not all of it. Certainly we know there's complexity and regulation and oversight and, many different risks out there with servicing. You need to do it right. You need to do it the right way.
Right.
And that's why I focused on that's why I asked her about the IMBs. I actually thought the number was around 200 or slightly more than that, but
it could be. Yeah.
But, I think it's interesting because of there's 34,000 lending institutions that do mortgages across banks and credit unions and community banks and, non-depository institutions, brokers alike. But only having less than 200, let's say, that actually have the ability to service, where they do it in-house or they subservice it, is a staggering number.
Yeah.
From an IMB, because that's the bulk of the servicing. Like, you might get some credit union that can sell, to the GSEs, but for the most part, they might service a small, really fraction of their book because it's some niche product that they want to keep. But beyond that, they're not real servicing players, right?
Right.
And so, because you got to wonder, like, are we getting into a future of the business where if you're not servicing, you're basically at a massive conservative, a massive competitive disadvantage? Or do you feel like, realizing that cash up front, you're going to be fine?
Yeah. I think it depends. And I hate to say it depends, but it feels like everything in our businesses depends. I think here's what I've found, and this isn't a slam on anyone, but I've gotten probably 7 or 8 mortgages in my lifetime, and not once ever, and I've used 7 or 8 different loan officers. Not once ever has a loan officer stayed in touch with me. I mean, and they had CRMs each time I've gotten a loan, so I think when you have, servicing, when you're holding servicing, and especially if you do, whether you service in-house or you do a private label, and you have that loan officer's picture and phone number and contact information on your statement every month, or you sign into your portal and there's your loan officer, and he knows that I might be able to refinance or something like that. And all I have to do is click on this button and it takes me to a POS. I mean, I think that's what people are starting to realize, or maybe that's the stickiness that people are trying to get, not only to build the asset. I mean, that's, a whole nother piece of it. But I do find it interesting that I've had that many mortgages and I've never once out of all those years had a loan officer stay in touch with me.
Yeah.
So, I mean, maybe that's the reason.
But my question is, with AI and all the top of funnel strategies, I mean, obviously there's a very public fight right now for Two Harbors, right? Obviously there's a real attractive component to getting to in front of the consumer first, because now the technology has made it, easier than it ever has been before to be able to get in front of the consumer and present them options, and then to create a digital flow to quickly execute on those options. You have to wonder, or I do often, is how much of a disadvantage is it, or is it a disadvantage at all for a large IMB not to have any servicing at all, right? And it seems hard to say that it's not a disadvantage, but maybe it's not. I don't know.
I think for a large IMB, especially, or even a mid-size, I think it is an advantage to hold servicing. And from an ownership on many levels. And an example of that would be, just for the owner and, from a financial standpoint, I mean, you look what happened with Franklin American. I mean, they were, one of the largest IMBs in the country at the time. They had about 40 billion in servicing, 25, it was closer to 40 towards the end. And, that was, so what Dan Crockett always said during that time, and Scott Tansel, is that we, servicing is a hedge when originations are down. So you have that servicing income, right? At the same time, when you're experiencing runoff, you still have your origination side to feed that pipeline, to feed your servicing. So from a financial perspective, they certainly made it work. They sold to Citizens, what was that, 2018, 17, 18, 19, for 500 and some million. So that was certainly, a benefit, but also from the standpoint of just having that borrower having your name in front of them. And, the target marketing and the platforms are so sophisticated now. In addition to whatever tools you might be using as a loan officer, you can also target, for refinances or, HELOCs, if you're an IMB that offers HELOCs. So I think there is some real advantage, but you have to be aware of the risk too. If you're doing Ginnies, you still have, especially as we get into a higher delinquency, timeline here, that can have, some challenges as well.
I think it certainly balances the options that an IMB has during different economic times, because while we are now in a lower, slower origination timeframe, although it seems to be building this year, that helps you offset. Yes, you have runoff, but that also gives you the opportunity to use the production hedge of your, origination team to turn them loose on the people that, are in your own portfolio, to try and retain as much of that as possible. And we've seen many companies that are very successful at doing it. That's very public. The other challenges, as she was just talking about, some of the risk with Ginny and stuff. If you don't do it right, it can really cost you business wise. Yeah. And a few headlines can really drive people away from you. As in anything in the mortgage business, if you don't do it well, it doesn't really matter. Right.
Yeah. Yeah. And we've seen that, it definitely, I think, is worth it. But then for some companies, they may feel like their recapture with their previous customers is very strong. But statistically from MBA, I believe the average recapture is around 18 to 20%. So it's not super, super high. Right. But if you have your servicing book, and if you get like payoff requests or things like that, you have an opportunity to intervene and check in with that customer and maybe even do some type of portfolio. I call it portfolio surveillance, but analytics that can predict. There's the models today are just amazing. Can they predict the behavior of a borrower? Are they going into open houses? Are they looking at Zillow? Are they looking at refinances? I mean, there's a number of ways to be able to get in front of that consumer before they actually reach out to another mortgage entity.
I do want to ask you a question, and this comes from your LinkedIn profile. I love your intro. Be different, make a difference, turning servicing into a strategic advantage through relationships, innovation, and customers for life thinking. So obviously my business is 100% built on relationships. I'm all about the long term. I rarely do I show up anywhere and somebody says, oh, we've got this compliance challenge today. This state's coming after us for this, or we need help with that. You have to, earn their trust and respect. And then when something happens, kind of like the oncologist, when something goes sideways with the state or, CFPB, then they call. But you've been a long-term relationship person. Every time I go anywhere with you, about 3/4, if not everybody in the room. So, and it's always great to see how you're willing to expand your relationships with other people and introduce folks around. How has that been successful for you? If there's anything that comes top of mind for you that just, provided those opportunities.
Yeah. Well, Bob, and we've known each other quite some time. I think if you just treat people right And also, we're all here to help. And I feel like, and I hate to, go back to when I got my CMB, but I remember how many people took time out of their day to help me. They weren't getting anything out of it. And so I think that builds relationship. And so, I mean, I can't tell you, I got a call from, a friend yesterday who's looking to hire somebody. And so I was able to give them some names. But, I think we help people just to help them and to bring value. And, I don't know that it's really anything more complicated than that. I just want to be valuable and help people, because I had people that invested in me. And I have never forgotten. In fact, I've been honored with some awards and things like that. And I always go back to those people that gave me a chance when I had no experience. So I think you build those, and also you show up for your people, right? I mean, you stay in touch. I can't tell you how many people that I stay in touch with that are retired. I mean, I always say, good news, bad news. Once you're connected to me, you're always connected to me.
Yeah.
So I think it's not that complicated. You just have to show up, be nice, help people, be different, make a difference. That came from my very first manager at PMI. He said, here's your job. You show up every day, you're different, and you have to make a difference. And that's just it. I mean, that's just it.
What do you think is a in this broker versus banker dynamic in the marketplace? There's an undeniable growth in non-delegated correspondent lenders, right? Plugging into Rocket, mostly to UWM. I think there's about 27 or 30 of these large, I call them mega brokers, but they're banking 2/3 of their volume, right? With Rocket or UWM closing it and funding it in their names, right? What do you think are the longer term threats to IMBs?
That's a good question. Longer term threats. Well, I definitely think.
And this is not a CMB panel, by the way.
No.
Yes. If it was, she'd be in charge, and we'd be the candidate.
No.
You've already passed. Rick,
that's a really good question, because I was talking to someone about this, given all the headlines recently. And, I think about how our business evolves and ebbs and flows, right? And so, there was a time where, a lot of the brokers got out of the business and went to something more stable. So I do think that we're in a cycle now where, the brokers are growing, and that segment's growing. But I feel like, with so much concentration in the biggest wholesale buyers or investors, I think it's not a good idea to put all your eggs in one basket. And so it'll be interesting to see how all this plays out in the future, because I feel like an IMB, there's a lot of advantages to an IMB, but, there's advantages to being a broker as well. But what I see is more stability with an IMB. These mega brokers, if they're only using one or two outlets, what happens when we have a downturn? Much like we saw in Countrywide. What happens when there's a downturn and investors get out of that line of business?
Well, that was the first thing I thought of. I'm certainly not calling UWM the next Countrywide, but certainly that's been a headline. And my question is, if there's any destabilizing market effect on any large scale organization, could be Rocket, could be UWM, but looking at UWM in particular, there are 10, 12, 15 billion in production through these top non-del correspondent platforms that are plugged into UWM. And it seems like that could be massively destabilizing to that very fast and up and coming and growing space.
Yeah. Well, you think about, like, as we go through cycles, right? Whatever the cycle looks like, as we go through cycles and you have, these very, very large aggregators, what happens when if something happens, that they are not around, because then what happens to those people selling into, whether you're an IMB selling into a large aggregator, or you're a emerging broker banker selling to one of the large aggregators. I just think it's going to be interesting to see how this plays out, given over the next few years, because I think it still seems like it's going to be a tough market, and we saw it, and we've seen.
And you think the tough market will impact who more negatively?
Gosh, you know what? I don't think I would have an answer for that.
Do you think it favors brokers in a tough market? Do you think it favors the stability of IMBs, stability of servicers?
Yeah, I don't know that. It depends on the IMB, and are they having profitability issues? What is their cost to originate? Because if you talk to, and I'll, I think about Jim Deitch, and he's
love that guy.
Oh my gosh, he is the wizard. I mean, I could listen to him all day long. He's fascinating. But if you talk to him about what he sees from a cost to originate, and the willingness or unwillingness of the leadership to take his recommendations, I think it depends on the leadership. I mean, because we have got some very strong leaders in the IMB space. And I personally know some brokers that are very serious about their business model, how they manage their costs, who they're selling loans to, what's their concentration risk. I mean, they're very sophisticated, right? So, I think it really depends on the leadership of those individual companies, because we saw it in the past. We saw, a lot of brokers survive. We saw a lot of brokers move to the IMB or even to banks because they were more stable at the time. But I think it's the leadership that can make a difference. And, and Jim Deitch would be a great person to ask that question to, because he's got the data. He knows.
It is interesting, because I will agree with you. It depends on the entity more than the structure, because there's advantages to being a broker. There's advantages to being an IMB. There's advantages to being a bank. The challenges are if you're not running it or risk, preparing yourself for business continuity of different challenges. I mean, who knows, there's a potential, virus that's going around now, and it's a different one. And maybe it's not, another pandemic, but you never know what could be around the corner for us. We have to be prepared for so many of these different outcomes. And one of the byproducts of post-pandemic and low rates, when everything got really tight and everybody started cutting back, a lot of the larger producers at medium size, especially in the Southeast mortgage, IMBs, they said, why am I paying for that manager, that manager, that manager, and that manager? Why don't us three get together and we'll form our own brokerage and we'll just sell it, and we can sell this off. We don't have to worry about all that other cost or expense, and it's on us. And they're loving it and they're enjoying it. And, I know Florida's seen a huge growth of mortgage brokers. And it's, ones, twos, threes, groups of people putting stuff together and being very successful.
What's old is new again.
Oh yeah,
exactly.
Let's hope. God, I turned 53 this Friday, so let's hope. Let's hope what's old is new again. Yeah, as opposed to what's old is new. Well, yeah, I don't know.
I would tell you you're getting old, Rick, but I'd love to be 53 again.
Yeah,
amen.
Well, yeah, no, it's funny. That reminds me of my father had a friend of his who was 102 years old, and he used to meet with him at a McDonald's, and he used to always say to my dad, "Oh, Bernie, to be 82 again." I'm like 82. That's incredible,
Yeah.
What Dana, what would you say to be about, the whole Vantage Score conversation? There's all these conversations around the, projected risks and all the hits, all the potential LLPA hits that the GSEs will have on it. And this is a total out of left field question. And then the investor community and the traders have questions around whether or not these assets it'll impact their long-term performance. What about mortgage insurance organizations? Like, are they looking at Vantage and saying, God, we're so used to this structure, and we
Yeah.
have our models and risk assessments associated with this rest. We're going to kind of tack on a Vantage fee onto MI. I don't see that. That conversation hasn't happened very audibly. I haven't heard many people talking about it in that way.
Yeah, you know what? Deb Jones, was talking about this last week, and I think it's going to be interesting to see. I mean, I wonder because so much of their models, right? I mean, these black box models have been built on the FICO, on classic FICO. So it's going to be interesting to see. Are they going to have two models, like one for Vantage and one for FICO 10T, and then are they going to find a way? That's a great question, but I can't imagine that it's going to be an easy fix, because they're going to have to build the models, and they're going to have to be confident in the models. Mortgage insurance is all about risk and data and compliance, and I think it's going to be interesting to see how they handle it. I think the whole conversation, and I think Deb Jones has said this several times, is we haven't figured out how to operationalize any of this yet.
Yeah.
And whether you're a Fitch rating, and what do you do when you have a whole MBS security that you need to rate? That's is it all going to be Vantage, or is it going to be a mix? I mean, how is that going to play out? So, I think this is going to be years in conversation. They say they'll take it now, but and I know some companies have been beta testing the Vantage product, but really we can test it all we want on the front end, but we need the to your point, the MI companies, we need the rating agencies, we need the investors to have confidence in it. And I think that's going to take a while.
And how do you hedge a pipeline with not really having, I mean, we can have sort of a confidence. People talk about gaming the system and that kind of thing. The reality is we game the system anyways. Like if it's a bad FICO, if it's a bad credit score, we look at other compensating factors, right? Mm-hmm. So it's like we're constantly quote unquote gaming, trying to figure out like what's the deposits, how much is the down payment, what's the LTV, what's the DTI, like what's the the seasoning of the employment of the borrower. I mean, mm-hmm. We're constantly looking for any reason that's a defensible reason to argue that the consumer, that we lent to this consumer with the idea that the consumer had the ability to repay, right? It doesn't come down just strictly to the FICO, the credit score, but it just seems to me that I don't know how you assess a servicing book, based on traditional FICO versus a newly formed Vantage score. Mm-hmm. And go ahead.
Oh, I was just gonna say, I have heard that they have some white papers and analysis, both on Vantage and the FICO 10T. And I haven't seen them published yet. I know they're out there. I don't know if they have been publicly, published, but I think that's going to be that's you're right. I mean, we do those things today, but then when you get downstream and you start having investors looking at securities, how are they going to react? I mean, do they really know about the things that we have to do up front, today to get a borrower in a home? And I think that that's just something we've been doing for years, is helping a borrower, compensating factors, working with them to get their credit score, credit scores up through, financial management and advice. But that's going to be a big one. But I think it's going to take a long time to, it'll be a couple of years to be able to really operationalize all that. And the systems, the systems have to catch up too. Pricing engines, LOS systems. I mean, there's a lot to that hasn't really been talked about as much.
So with your current capacity with Cornerstone, like how would you characterize Cornerstone as a does Cornerstone do wholesale, or is it all just 100% retail?
No, The Cornerstone Home Lending side is all retail.
And any consumer direct?
No, we don't have a consumer direct group. Now we would like to put one in servicing so we can support our customers who need us
Capture.
to do, so we can help our third party customers.
Yeah.
But most of that business most of the Cornerstone Home Lending side is mostly retail.
And are you and how much servicing does Cornerstone have? Is that publicly available? Is that something you could disclose?
Oh yeah, no. So do you mean as on our entire book, including the Cornerstone Home Lending? I mean, a very small amount is Cornerstone Home Lending. Only about 17% of our business that we hold is Cornerstone Home Lending. 83% of our business is now third party. We've grown tremendously over the last 2 years. We've been lucky that our story is resonating. I mean, I was sharing with Bob, servicing is not a one size fits all. Nope. So, what one company may want in a servicer, another company may want, their borrowers to be handheld a little bit more. But overall, we have about 130,000 loans on our platform. Bear in mind, we just started taking our first third-party customer maybe 2 or 3 years ago because we were born out of a need to develop a servicer that really focused on the loan officer and the home buyer. So, we had a platform to build and all that. We were with another third-party subservicer that we left because we just felt like we could create a better experience for our customers, and now we can create a better experience for our customers' customers. But the Basel III limitations is really what hurt us in the beginning, and that's a big topic now too. You know, being owned by a bank, we can only hold so much in MSRs. So when we became a bank, we ended up selling off quite a bit of our portfolio. So,
is that a horse?
My phone.
Oh my God!
My phone,
I was like,
Denise.
She's a Tennessee girl.
I love that. That is fantastic. I was like, I thought of the show Mr. Ed.
It's I always say it's why I work. It's expensive to be me. So I have 3 horses. I have 3 horses. So there you go.
Good for you.
And I have a farm. So it's a lot.
That's fantastic. I love it. How many, and I don't mean to, can I ask another question, Bob? Is that all right?
No, it's up to you. Go ahead.
Bob, how much longer, like, what's your career trajectory look like? How many more years can you see yourself doing this? Is it a matter of just as long as you want, or do you have kind of a, you're in the 4th quarter of your career, and you've had an amazing career. Like, what's your plan?
I've had someone ask me that before, a couple of people. I can't really give you a timeline when it's not fun anymore. And I have to tell you, I'm having more fun than I've had and enjoy, it's almost, I almost feel like I'm on a mission with Cornerstone, specifically to change the way how people speak about their servicer. Because not many people say, "Oh my God, I love my servicer." That just doesn't happen. And I think I
don't think anyone's ever said that.
No, exactly. Well,
unless they work for the
do,
servicer.
so we're lucky with that. But I think as long as it's fun, because I could probably retire now, but I'm having so much fun, and I'm so happy to have a company that I can get excited about each day. And also just the ability to have impact on other people's lives. I do sponsor people. I've probably got well over 50 or more candidates that I've sponsored for their CMB. And but I love seeing also the great joy is to see those CMBs go on to leadership positions. And I can tell you a perfect example of that is Tammy Gravely, who's now the vice chair for the CMB Society. She was my candidate in 2019. So I just get excited about getting up every day. I get excited about going to conferences and seeing people. And so as long as it's fun, then I can definitely see myself doing this for quite a few more years.
By the way, Rick, those are questions I have to answer, for my wife, because I'm in a position where I could retire in a couple of years, but, Melissa being 9 years younger than me, and just as much fun as I'm having in the opportunity, the travel, the conferences, it's what you see in Dana right now, the people who smile when they see you, the people who want to talk to you, just the friends that you have. And I call it the work family. It is 100%. I see people and it's a handshake, a hug, or a kiss or whatever. It's just so much fun to attend events because I see so many industry friends that I just want to hear how they're doing and what's going on and how we can help them if it's needed.
Right.
I love that. I think sometimes as we age in an industry, there's a tendency of people to kind of fade out, to kind of lose their relevance, and I think because of social presents a really unique opportunity because it gravitates toward the young. They have a lot to say, but they don't have a lot of experience behind it. Right.
Yeah.
So they're very loud, but they don't have a lot of experience, and they don't have a lot to say, but they're saying a lot. Right. And I think people like us who have been in this business a long time, social gives us a very non-intuitive platform because it kind of gravitates toward the young, but I think it's really caters to the older workers because we have a lot more to say. We have a lot more, credibility behind what it is that we do say. It's just that we're not very loud.
Yeah.
We're not as vocal because we're not as, these tools aren't as intuitive. And so I always encourage people to try to be a lot more active and a lot more vocal on social, because I guarantee you that realtor who wants a deal to close is going to go after a curmudgeon who just knows the nuts and bolts of this business way better than some, pretty face, male or female, in their late 20s or early 30s who are great hustlers, but they don't have the options, the experience, the relationships, and the connections that they have that those of us in the business who we've been in the business as long as we have to be able to get deals done.
Yep.
Right. And serious realtors or builders want to deal with people who can get things done.
Yep. Everybody.
So that's my case. That's my case, Dana.
That's good. I love it.
That's the case for us.
Yes. Well, I think, we do have, a lot to offer. And like I said, I feel like my role now in the industry is really to help mentor and lift others up and help them get their CMB, remain active in Future Leaders, maybe helping some other states if they have a desire to start Future Leaders program, just share what we've done in Tennessee. I mean, Tennessee really has spawned Louisiana MBA. I had some long conversations with them, and I mean, look what they've done. They're amazing. Virginia now. I've had some conversations with North Carolina, but what I also see is, and I keep going back to Tennessee because that's what I know the best. But our Future Leaders program, Retta Gardner, who's also a CMB, and I started that program in 2017, and to see how it's evolved, but also how people that came through that program have now had it evolve and shaped it as their own, but now they're the leaders taking over. And then I'm sure they'll have a succession of people. I mean, that's the gratification we get at this point, in our careers, is seeing those that we've mentored and helped grow, see them grow and see them mentoring others. I mean, it goes back to lineage. We talk about that a lot in the CMB Society. It's the most gratifying thing. And that's what I see my role today. On top of spreading the word about how great servicing can be.
I love it.
We certainly could talk to you forever, Dana, but I think we're getting close to our time, right?
We are. And I really appreciate the time. This has been great. And, I love having a person of your influence and your leadership and your career in this business, join us. And, of course, you were a part of my CMB journey as well. And appreciated the dinners we've had together at conferences. I look forward to seeing you hopefully at secondary. And I'm sure, I'll be at secondary as well. And I'm really looking forward to it.
Yeah.
I'll see you both at secondary.
Yeah, we'll all be there. So I'm looking forward to it. Yes, and thank you for allowing me to be part of your journey. It was really fun, and yeah, and here's here's your contribution. I mean, you're already spreading the word, so that's so fantastic.
Yeah. Well, good. Well, I appreciate you. Until the next mortgage podcast. Thank you, Dana, for joining us. And Bob, we'll see you, Dana, at the Mortgage Secondary.
See you
Yep.
next week.
Thank
All
you,
right,
Rick.